Happy New Year, folks. Happy New Year. First video I've recorded here in the new year. Just got done my unplugged vacation, my third annual unplugged vacation, which was absolutely phenomenal. If you guys don't take one of those each year, I highly suggest it. I've been doing it for 3 years now. I usually do it at the very end of a year, and usually I'm ready to get my batteries recharged at that time. So did that. I'm back and happy to be with you guys, and I hope you're happy to see me once again. Okay, appreciate y'all for being here each and every year, including this new year. Now, while I was gone, a lot of funny stuff was going on out there. I did keep an eye out. I always keep an eye out even when I'm on vacation, what's kind of going on out there in the market, right? And I saw interesting stuff like what would happen with Tesla stock. Tesla stock in the last few trading days before the end of the year and into that first trading day of 2025, stock went down over 17%, like absolutely unbelievable, right? And then all of a sudden, magically Friday, it comes back 8% plus. I'm like, oh yeah, I see what they're up to here in regards to good old Tesla, Tesla. Now, while I was on vacation, I sold out of a position completely, 100% out of this position. And I'm going to share that in this video here today, what position that is, why I decided to get out of it completely, okay? I also bought several stocks while I was on vacation. I'm going to show you exactly what stocks I bought, why I bought those stocks. Additionally, in this video, I wanted to cover, since it's been a long time since I recorded a video for you guys, I wanted to cover Tesla, what's going on with Tesla stock, where I see things going from here. Palantir, we're going to talk about the same. And then SoFi. All three of those stocks we're going to address in this video as well. I'm going to share my opinion and perspectives on where those stocks are headed here, kind of moving forward in for 2025, okay? Appreciate y'all for being here as always. As the sign says in my garage, all I need for you guys, one thing only. It's this year and every year, baby. Smash that thumbs up button. I appreciate everybody for being here. Also, it releases stress. There's been studies done, I believe, that showed something like stress is relieved when you smash that thumbs up button. So I appreciate y'all for being here. Also, thank you everybody subscribed here to the channel. In 2025, if you're looking to take your investing game up to a much higher level than where you're at, you want access to all my premium courses, you want access to my private Discord community, we can do that for you. Pin comment down there. You can fill out an application to see if you can join us in there. Additionally, you'll get your Steel membership cards in the mail. The 2025 editions, which this is a 2024 edition of a 1000X card, but you'll receive that baby, and then you'll also receive your private stock group Steel membership card as well, which this one is actually a 2023. We got 2025s that you guys will be getting now, okay? So once again, that will be pinned comment down there. Alrighty, guys. So what did I sell out of? Why did I do it? And then we'll talk about stocks I'm buying, and we'll talk about Tesla, Palantir, and SoFi. Well, here's where the story starts. The story starts with a company named Toll Brothers. So Toll Brothers is a company that is more of a luxury home builder, usually price points around $1 million plus for their homes. And the company's, I mean, the best thing ever pretty much could have happened to this company, right? You had a big wealth effect in the economy with very low inventory in real estate, right? And then you had actually mortgage rates go up, which locked a lot of people in at very low interest rates. And you had this kind of, couple year phenomenon where then somebody like a Toll Brothers, a big home builder, could basically give interest rates that were like teaser rates, like that significantly undercut kind of the average mortgage out there, right? And so what's happened with Toll Brothers earnings per share is it's gone to the moon, literally. Like, this is not normal, just so you guys are aware. This is not normal for a home builder to have their earnings per share go up like this. Now, this isn't just a Toll Brothers phenomenon. This is, if you look at pretty much all the public home builders and look at their earnings per share over the last few years, they've literally gone to the moon. It's ridiculous, right? I mean, look at this. Toll Brothers went from a company that was kind of, a $3 to $4 EPS to $15 here recently. That's unbelievable, right? Now, there's been a lot of changes that are happening very recently in the higher end real estate market. Now, remember, for somebody like a Toll Brothers, they're selling homes $1 million plus. Well, if you look at my city, Vegas, right? I just kind of sorted here on Zillow $1 million plus homes, and I found there was over 900 results of $1 million plus homes. Inventory has been climbing significantly, specifically in this bracket. If you go down to like the under 500K homes, inventory is still a little tight in that bracket, but when we're talking $1 million plus, I can tell you inventory has loosened up extensively, specifically really in the last 3 to 6 months, okay? Let's look at this little area I have zoned in here in my city, right? 109 results for $1 million plus homes there. It's unbelievable. And I'm seeing some people getting kind of desperate with some of these high ticket homes, right? This is Floyd Mayweather's old home right here, okay? The one that he used to feature on all the boxing shows back in the day when they'd be documenting his life, getting ready for a fight. This was his famous home. And he listed this for sale, and he just cut price. $3 million. Not a small cut, $3 million. And he still can't move that house, right? Beautiful home, very well done, but he can't move it. It's a monster. But this is what's going on, and I'm seeing more and more price cuts. And the people that aren't doing the price cuts, those ones are just collecting dust. They're not moving these homes now at this point in time, right? Now, additionally, what we have seen here is since late September, where mortgage rates bottomed around 6%, we've seen a continuous move up in mortgage rates overall. And it's fascinating because this is completely the opposite that everybody thought was going to happen. What everybody thought was going to happen was the Federal Reserve was going to start cutting interest rates, which meant mortgage rates were going to plummet, right? And so people thought that mortgage rates were going to go from 6% into the 5s at this point in time, right? Now, generally speaking, if the Federal Reserve is in a cutting cycle, generally speaking, over time, mortgage rates will drop. And if the Fed is in a hiking cycle, over time, you'll see mortgage rates go up. But it doesn't work like instantly like that. Sometimes there's a 6 or 12 month lag there between the Federal Reserve cutting rates, because just because the Fed cuts the interest rate when it comes to Fed funds rate, that does not mean magically mortgage rates go down, because mortgage rates are affected by things outside of that. And so if suddenly, let's say, Treasury yields are jumping, right, because they believe inflation's coming back, the Fed's going to have to go higher, and all those sorts of things, right, then that can actually mean mortgage rates are going to go higher and higher and higher. So this is just a little food for thought in regards to this. And this is what's happened. And ultimately, none of this bodes well for somebody like a Toll Brothers. Like if you're talking about mortgage rates going higher when people thought they were going to go lower, if you're talking about really, this is the main culprit though. What I'm seeing is inventory starting to pile up in a lot of markets. I don't think that bodes very well for Toll Brothers. And so I started a position basically betting against Toll Brothers stock as a hedge for my portfolio of like, well, if things go south here, at least my portfolio's got a hedge. And so across my portfolios, I hedged with a Toll Brothers put, right? This specific one in the public count made me over 100%. And I had bought this on October 18th, less than 3 months ago. So I made over a 100% gain in less than 3 months on these Toll Brother puts. I sold it out completely. Additionally, I had bought quite a few put options in my public account as well in regards to Toll Brothers as well. These were 170 puts. These were playing on the safer side, but I made over 70% on these. Look at this one was open November 12th. This one was open December 9th. So I made a lot of money in a very short amount of time in these puts, and I have now completely 100% sold out of all my put options on Toll Brothers now at this point in time. I have no put options on Toll Brothers anymore now at this point in time, right? Now, the reason it's gone so well, right, is because Toll Brothers stock plummeted. I mean, look at this. This is actually, I was watching some CNBC one day, and I saw, they brought this graphic up here. Toll Brothers, literally the worst stock of the home builders, down 23.3% month to date. Just incredible move. Now, do I believe there's more juice to be squeezed in regards to Toll Brother put options? Here's my opinion. I think there's a chance to squeeze some more juice here. It is possible. It's possible that Toll Brothers goes down to $80 or below $100, okay? And right now it's in the 120s. So it's possible it goes to under $100 or maybe even goes to $80 range. With that being said, I don't want to push my bets in regards to that. And the way I'll put it to you guys like this, right, is you be greedy with your long positions. When you own great companies, you can afford to be greedy with them. You can afford to have them go up hundreds of percent over time and not worry about selling, right, or 1,000%. If you own truly great companies, that's what they do. They are going to appreciate hundreds of percent, thousands of percent, or tens of thousands of percent over time. That's what great companies do. You go look at, track record of all the great companies you would respect on a high level, and that's what they do, right? But when it comes to hedges, when it comes to bets against stocks, against indexes, things like that, You don't get greedy. If you make a ton of money in a very short amount of time when it comes to hedges, you take your profit and you say, peace out, I'm out of here. You run, okay? That's me in regards to toll. So although there's a chance, we can call it, if I had to put an odds on it, I live in Vegas, they put odds on everything, right? If I had to put odds on it, I would say there's probably about a 50-50 chance toll goes under $100 in the next 6 months. I would say there's probably a 20% chance that it goes under $80 in the next 6 months. With that being said, I don't want to take that risk because let's say I'm wrong and toll starts to drift back higher, right? It goes to 130, 140, 150. People say, yeah, maybe inventory is going up, but Toll Brothers will be fine. They'll still put up great numbers. They're going to buy back a ton of shares. They're going to up their dividend, blah, blah, blah. Sure, all my profits are going to go evaporate in that situation, right? It's all going to go buy very, very quickly. And so I look at it and I say, I got a chance to make a huge profit here, a massive percentage. Peace out. I'm out. Like, I'm good. Like, if Toll Brothers continues to go down and it goes to $90 and I'm like, dang, I left some on the table. Fine with me. Like, that's just part of the game. You know what we call that? We call it the cost of doing business. It's the cost of doing business. Okay? You're never going to time these things out perfectly, but if you get a chance to make a fortune in a very short amount of time, you got to take that opportunity when it comes to your hedges, right? Be greedy with your long positions. Now, additionally, I have been receiving some dividend money, right? Nike just paid me out $495 in the public account. Meta just paid me out $850 in the public account. This is another reason you can be greedy with your long positions, right? Is over, years, those stocks should appreciate. But additionally, when you own great companies that also pay dividends, right? They pay those dividends. Like, I'm going to have another $500+ coming in from Nike stock 3 months from now. I'm going to have another $850+ coming in from Meta another 3 months from now, right? And Nike and Meta are probably going to up those dividends more and more and more, right? And the great thing is I get that money every 3 months and then I can reinvest that money. I think it's, Meta next year is probably going to be paying me out $1,000+ because I think they're going to go up their dividend, in my opinion. They're probably going to start paying me out $1,000+ every 3 months just for Meta, which means I'll probably be collecting $4,000 or $5,000, maybe even $6,000 a year just in the public account alone from the dividends Meta paid me out. You can afford to be a little greedy when it comes to your long positions, okay? Now, what stocks did I go ahead and buy? Okay, then we'll talk more in depth about Tesla and Palantir and SoFi. So here's some buys I did, right, in the public account with that Toll Brothers money, which was quite a bit of money, right, and along with the dividend money. So I bought 75 shares of Nike, a pretty good size buy there, about $5,500 worth of Nike stock. I bought 100 shares of AMD. I'm buying AMD rapidly right now. If you see the way I'm adding AMD, I'm not messing around here. I think I'm working with a small amount of time in regards to adding AMD. And so that's why I'm adding this one so aggressively. I hope I'm wrong on that. I hope I have another 6, 9, 12 months to add AMD for $120 a share or below. But I don't think that's that realistic. I think I'm working under a time constraint here, and I need to add AMD aggressively. And so that's why you see me doing these big buys after big buys in AMD here recently. Bought another $12,000 of AMD, $120 I paid for those shares, right? Additionally, I bought some Celsius shares. Small buy there, about 50 Celsius shares. And additionally, I bought some Monster, which is just a hedge against Celsius, essentially. And that one was about $52. I paid for those ones, right? So you can clearly see AMD and Nike. Those are my highest conviction risk rewards I find in the market right now. Like Nike's risk reward right now in the low 70s and AMD around 120 is just phenomenal for long term. What those stock prices are 3 weeks from now, I can't tell you. But I feel like 3 years from now, Nike stock is probably $150 plus. And I feel like AMD stock's probably 3 years from now, probably $300 plus. Based upon where I see those companies' revenues and net incomes going over the next few years and the realistic PE ratio I see those companies commanding. So, and what are the chances, it's 3 years from now and Nike stock's $37, $38, and what are the chances AMD $60 3 years from now? Extremely low in my opinion. And that's why I'm willing to buy those stocks very aggressively right now because, yeah, I have a lot of conviction in those particular stocks. And it shouldn't come as a surprise if you watch my channel, right? I released this video. I recorded this before I went on vacation, right? 7 stocks to buy now, January edition. Like, man, like, guess what 2 of the 7 stocks that were featured? AMD and Nike. I did this video a couple weeks ago. Nike stock is easy money. I very rarely ever call a stock easy money. Ever. Like, it's insanely rare for me to ever call it a stock easy money. And I did it with Nike, right? And, I also released this video 3 weeks ago called Buy AMD Stock and Don't Stop Buying. 32-minute video that went in depth on AMD. So if you follow the channel, extensively, like, it's not going to come as a surprise that I'm adding those 2 stocks aggressively right now, man. And we'll see where it plays out. But I think, if we fast forward a few years in the future, I think I'll be very happy camper that I was buying AMD stock so aggressively, in early 2025. We'll see. But I think things will look pretty good there. Okay. Now, we got to talk Tesla. We got to talk Palantir. We got to talk SoFi, my 1000X mug here. Okay. And let's talk about these stocks. These are obviously all big positions for me in the public count. Tesla, pretty big position for me, and we're now up 2,929%. Palantir, pretty big position, up 963%, and SoFi is a pretty big position, up 109% in regards to that, okay? So let's tackle Tesla first, and then we'll get to Palantir, and then we'll get to SoFi, okay? So here's the deal with Tesla, okay? I got to be honest with you guys. There was a lot of, I think, kind of negative publicity that came out toward the end of the year, in the beginning of this year so far. And some of it's fair, some of it's not fair. It depends, as many things do with Tesla, right? But this is troubling. And I got to be honest with you guys, because we're seeing this lead by BYD. Now, keep in mind, this does include, just to be clear, this does include electric and plug-in hybrid sales. But at the end of the day, I don't like the trend I'm seeing here. BYD continues to run further and further ahead of Tesla, right? This is unit sales we're looking at. And, Tesla obviously has been stagnating for many, many, many quarters now. Like, it's not like this is a new stagnation. We've really been kind of stagnating for like 2 years as far as quarterly sales go, which is not ideal. But meanwhile, BYD continues to just put up numbers, right? It's fascinating because you go back a few years ago and Tesla had a massive lead over BYD. And BYD just continues to put it up, including this latest quarter. I mean, explosive to the upside. No pun intended from the next article we're going to get into here. But I don't like that. I don't think that's a good look for Tesla. It does worry me as a Tesla investor. Like, we've got to get things back together in 2025, man. Because if we don't do it this year, when are we going to do it? We got to do better. We got to do better. Okay. Now, also, this brought some other, I think, kind of negative publicity to Tesla, and I see this becoming a more of a negative publicity situation here, okay? So, obviously, I'm sure you guys saw the situation that happened with the Cybertruck and the guy, and that whole situation, right? So, but what happened after that was pretty fascinating, right? Because now people are talking about, like, oh, your car's spying on you. And the reason being is, Elon Musk basically and Tesla, they released all this information about where the car had gone and did this and did that and did this and did that, right? And you see things like this. It says, a quote, "I have to thank Elon Musk specifically," said Las Vegas Metro Police Department Sheriff Kevin McMahill to reporters. He gave us quite a bit of additional information. Now, for some people that don't really care that much about privacy, they'll have no issue with this, okay? They'll be like, sweet, good, give all the information about that. But for the people that don't trust the government, they're going to have a lot of problems with this, okay? And with these sorts of cars spying more and more, it's another one of those things that if you are of the realm of the thought process of like, because you got to understand the way driving has always been seen in the United States of America. It's seen as freedom, right? And one of the best feelings, as a kid is when you get that driver's license, right? And that sense of freedom of like, I can drive anywhere and this is awesome, right? When you're talking about your cars have all your data, they know exactly where you're going, and then they could release that data to the government, right? Not everybody, like I said, some people don't care about that. They're like, whatever, release my data to the government, show whatever. Some people don't like that, okay? They like more of the old school feeling of cars. If you could just, oh, by the way, did I show you that? Holy smokes. Some people like the old school way of just like being able to drive and not having everybody keep track of you, right? Because you kind of go down a slippery slope and you're saying, okay, some people could look at this and say, well, it's a bad guy. They shared information like this. That's good, right? But then you could take it a step further and you can say, okay, Why not put cameras on all the roads? And then every time you ever run a red light, you're going to get a ticket for that. Every time you speed over 5 miles an hour over the speed limit, you're going to get a ticket for that, right? Because you start going down the slippery slope, and the next thing you know, you're China. Okay, so that's why it's important, and I need to explain that to kind of both sides, because sometimes people that don't care about privacy and the government being in people's stuff, like they don't quite get it, and so I want to explain, from the other frame of thought, because you start going down more and more of a slippery slope, where next thing you know, there's this situation. So in some people might not have a problem with this, like, okay, if somebody runs a red light or something like that, or they're turning and the light's already red, they should get a ticket for that. Or they go 7 miles an hour over the speed limit, they should get a ticket for that. Some people feel like that. Other people are like, what? This is crazy. Like, are you serious? I'm going to get a $300 ticket because I went 8 miles an hour over the speed limit? Like, what? So you go down a slippery slope. So this is going to be a bigger subject that's going to get talked about a lot. And it could bring, I think, some negative publicity to Tesla, because this is going to be bigger than Tesla. Because at the end of the day, all these new school type vehicles are going to start tracking every place you go, all your data, right? It's all going to start being collected. And then people are going to have questions about, does that data end up getting fed to the government, right? So just a little food for thought in regards to that. No, bigger issue for Tesla, though, is obviously the valuation. I mean, the P ratios are ridiculous right now. We know that. The forward P, the 2-year forward P, the trailing 12-month P, it doesn't matter which way you look at it. It's all sky high, right? And the main issue is with these high PEs is the revenue growth has been awful, right? Trailing 12-month revenue growth of 1%. Now, so that's all the negative in regards to Tesla. But the good news for Tesla is this is what's expected to happen, right? This is looking at 1000X here. The revenue expected trends for Tesla, based upon analyst expectations, is we're supposed to kind of trough revenue and things are supposed to get better and better throughout 2025 and 2026. And if that happens, I think Tesla's still a hard stock to bet against. I have bet successfully against Tesla stock in the past as a Tesla long, right, and made some pretty good money there. And there's certain opportunities that I sometimes see in regards to Tesla that it makes sense. But you usually need it to be in a time period where it's not just high valuation. You need a time period specifically where like revenue's downtrending or the business is downtrending. The issue with betting against Tesla right now is all you really have is like some negative stuff around it, but there's always negative stuff around Tesla, right? And you have valuation. But if the business trends up, if deliveries trend up in 2025, right, and there's more confidence they'll continue to trend up in 2026, if you see revenues getting back to double-digit growth in 2025, if you see earnings per share growth even faster than that, it gets to be a really tough to bet against Tesla stock, right? It doesn't mean you have to bet on Tesla stock and go long. It just becomes a more and more difficult bet against Tesla stock. Now, if you guys don't know, I own 2 Teslas, right? I own Model S Plaid, I own a Model X. And my first Tesla ever was back in like 2000, I think it was 19, Model 3. Still love that Model 3 Performance Edition, by the way. It was a great car. I own these 2 cars, and I've tested the full self-driving on them many times, right? And seen like the improvements over time, and they have made phenomenal strides, right? Like Tesla's made phenomenal strides. With that being said, I was in San Francisco for New Year's, right? And I took probably at least 5 Waymo rides, if not 10 Waymo rides, while in San Francisco. Now, what I can tell you, as somebody that experienced that several times, and as somebody that's experienced Tesla's full self-driving whenever I want, right? I can tell you, I felt more comfortable in the Waymo. I did. I felt like the Waymo did a better job of driving around San Francisco. Now, some other place, I don't know. I can't comment on that, right? I've only tested Waymo in San Francisco. But I can tell you, if I had taken my Teslas to drive me around San Francisco or the Waymo, I felt safer in the Waymo. No doubt about it. I felt the Waymo just did a better job overall, right? So something to kind of keep in mind there, right? Now, in regards to Tesla, I got to be honest, I really don't like the setup in the stock for the next 3 to 4 years. And so, not to say it can't be some money made there, but I just don't love the setup, right? And that's just why I've taken my, insane profits. I sold the far majority of my Tesla shares. I only hold 1,000 shares in the public account now. And the reason being is I don't love the setup for the next few years. We're going to get hopefully back to nice growth here, but I'm worried about how much market share we're really losing. And if you look at what's going on in China, it's not good if you look at the market share trends, right? We're losing lots of market share. That's just facts, right? And we don't have the next new model in the market, and I don't know when that model hits, that's really going to get us back to much bigger market share, right? Additionally, there's been a lot of faith put in full self-driving and robo-taxi, right? Which is a big opportunity, but I have to warn people. The issue we're going to run into here is I was looking at like pricing a Waymo versus, which Waymo is owned by Google, like one of the most profitable companies in the world. So if there's somebody that could really afford to cut prices significantly and be willing to lose a fortune, it's certainly Google, right? And from my understanding, they've always lost a fortune on Waymo. But when we looked at pricing, and I'm going to do a very extensive deep dive in my private stock group on the subject actually tomorrow. I release a whole video because I screenshot it, Waymo versus Uber, all these different rides throughout our trip, right? But what I noticed was as if I put a umbrella on it, is Waymo was competitively priced with Uber, but there was a lot of times where if you had Uber One, Uber beat the price. And that's kind of an issue because I feel like Google's has so much money to invest, like they're willing to take losses. So what I believe is going to happen here is I believe that the profitability of the ride sharing platform will not be there in its first few years. I believe it's going to take several years of scaling that business up to really get it to start pouring in profits and really start helping Tesla's margins. I believe it's actually in its first year or two, I believe there's actually a decent probability it hurts Tesla's margins, and believe it or not, it hurts the profitability in its first couple of years. Long term, I think it could be great. Short term, I don't think so. And so there's a lot of people running to these conclusions that it's just going to be like overnight and just Tesla's going to be making so much money and it's going to be a gold mine. I'm like, slow your roll a little bit here. And so that's why I don't really love the setup. With that being said, I'm going to still hold my 1,000 Tesla shares, right? And I hope I'm wrong. And I hope Tesla has a robotaxi fleet come out. And I hope it's just a huge success overnight. And I hope it's just, the margins go flying and the profitability goes flying and all those sorts of things. But I'm not feeling super confident about that. I can tell you that much, okay? Palantir. So Palantir, this is a difficult one. I think this is much more difficult than Tesla. And the reason being is we're at a weird point with Palantir where I think it's still hard to tell if Palantir is going to make a run to $100 to $200 a share in the next 12 to 24 months. And you saw it up, 6% plus on Friday, up $15,000 there, right? But here's the deal with Palantir, right? I think analyst estimates are likely pretty low for the earnings per share. So I think Palantir is probably going to come in and crush earnings per share next year. So that's going to be interesting to see how the market reacts to that. Additionally, we've seen the revenue continue to increase in terms of the percentage growth, right? We don't know, is that going to start, stall out now and they're going to kind of stall out around 30%, 33%, something like that. But what if hypothetically they go all the way to 40% plus and then they sustain 40% plus revenue growth, right? Shoot, like Palantir is probably going even higher if that's to happen, right? If they only get to 30% and stagnate there, then I think we're probably staying here for a while. And when I say a while, I'm talking the next couple of years. But if we also go up to that 40% number or go to like a 50% number, I'll tell you, we got more to climb here. Now, additionally, you're going to likely see big expansion in that net margin in Palantir for the next 3 to 4 years here, okay? Now, with that being said, I think it makes sense to take some chips off the table if you're up huge on Palantir, right? And that's what I've done. I took over 2,000 shares off the table. So basically, the amount I took off so far exceeds what I ever put into Palantir stock. It's not even funny, right? And so now I'm in a position where I'm happy, like whatever happens with Palantir, like let's say the growth just goes 30% and then that's it, right? Cool. Like that's fine. If Palantir stock goes back down to $40 to $50 a share, sweet. I took a lot of profits in this one. That's cool. Like, and I don't mind holding my shares I currently have. Additionally, if there's a situation and we do get that major, 40, 50% growth, and I'm like, oh my gosh, like things are even way better than a bull like myself expected, I'm fine with that as well. I hold 3,000 plus shares in the public account, so I'll prosper in that sort of environment, right? And so I feel like now I'm happy with whatever happens with Palantir from here. If we go up to 40, 50% revenue growth, or if we just stay at 30%, whatever the dynamic is, I'm happy. I can't complain. Like it's all good for me. It's all gravy. I would feel very differently if I hadn't taken any profits on Palantir, and then let's say they only hit 30% growth and that's it, and then the stock goes back down to $40 to $50, I'd be kicking myself, right? And then let's say we stagnate at $50-ish a share for several years, I'd be kicking myself. But now I took those profits, I feel good, man. I feel good. Whatever happens with Palantir, we go to 150, I feel good. We can go down to $50, I feel good. Like whatever happens, happens there. SoFi. This is an interesting one, right? Up 109% on this one. That was up another 5% on Friday there, right? Now, it was a weird opening to 2025 for SoFi because the very first trading day of the year, the stock plummeted, right? Now, the main reason I believe the stock plummeted on that day, some people said, oh, it's because of downgrade, this and that. I believe the real reason that stock plummeted on that particular day, and let me get this out of the way. My battery's a little low there. I believe the real reason is retail was looking to take profits. Like no one wanted to take profits on SoFi at the very end of the year, right? Because you have to worry about paying taxes. So people were kind of like, I'll wait till the first day of January. I'll take my profits then. And that's exactly what happened. Like that first day, the stock just plummeted, right? And retail took profits. And so, like, I get it. Like, that was what it was, right? And since then, stocks obviously come back. Now, with that being said, I think SoFi could set up for like a triple-digit year in 2025. Am I betting on this? No. In terms of like a short-term calls or something like that? No. Because it's not worth it. It's not worth it. It might not happen, right? But I wouldn't be surprised if SoFi ended up being a triple-digit gainer, kind of like Palantir was this past year, right? Now, do I expect SoFi to have that sort of year, like a 300% type gain? No. But could I see SoFi having a great year? Yeah, I mean, if you look at SoFi's setup, the real only acceleration that happened in SoFi stock was at the very end of the year, right? And so I think more and more people are starting to understand SoFi, starting to understand the growth rates, what this company has going for it, how they're really just going to, if you look at SoFi, it looks like a company that's just going to continue to gobble up market share in the banking space for years and years and years to go in the future. And so you have to start thinking about SoFi as long as this company never gets over leveraged, Anthony Noto gets them through future recessions and things like that. You have to start thinking about SoFi in terms of becoming a banking giant. Now, they're more than a bank. They also have their tech side, their fintech side of their business as well, right? But I think that's how people really got to start thinking about this one. Kind of like they used to think about Tesla, they would think about Tesla as like this is going to be a massive automaker someday. And I'm talking about when Tesla was a niche automaker. And now you look at Tesla today and you're like, dang, they're a pretty big automaker, right? But, and obviously if you think Tesla's going where it's going over the next 5-10 years, you're like, they're going to become an auto giant. They'll start selling 5 million cars a year, 10 million cars a year, something like that, right? People got to start thinking that way in regards to SoFi. Like the more time ticks on here, the more members they attract, the more scale they get, the more and more people I think are going to realize like, oh my gosh, like SoFi is going to become a banking giant. And you start to begin to think a little bit differently because then you're not thinking about SoFi as a $10, $20 billion type market cap. You start thinking about SoFi as like, a potential hundreds of billions of dollars in market cap over time, right? And if they emerge more profitable than the old school banking models emerged, right? Then we could be talking about a company that maybe is $1 trillion market cap long term, right? Super long term, like if we're thinking like 20 years out or something like that, right? So those are just kind of things to consider there. But I think SoFi sets up pretty good for this upcoming year. But with that being said, I like to keep my risk a little smaller in regards to SoFi. That's not why I'm willing to risk the bank. And I do own SoFi in other portfolios as well, right? But I've always kind of wanted to get to 5,000 shares in SoFi, and maybe I get there in the public account. But once again, I do own SoFi shares in other portfolios as well, right? Now, I cover SoFi quite a bit on this channel, which, by the way, I haven't released a video in almost 2 weeks on that channel. I'm going to get it back up and rolling this week, baby. The reaction channel, Jeremy Lefebvre Makes Money. I cover a lot of SoFi on that channel. So if you care a lot about SoFi stock, definitely follow me on the reaction channel. You'll definitely enjoy that, okay? Now, 2025, we're going to have a lot of drama this year, right? There's going to be a lot of drama, a lot of upside drama and downside drama. There's going to be some moments in this market this year where, it's just full risk on. It's just, everybody's thinking about, they're going to be the next trillionaire and billionaire and all that stuff, right? We're going to have some tough moments this year as well. We're going to have some very volatile moments. We're going to have some moments where people question things very, very quickly. And so in a year like this, don't get caught up in the short term about, I'm going to be a billionaire tomorrow. Don't get caught up in the short term of like, oh my gosh, everything's going to zero. Don't get caught up in all that crap. Focus on the long term. make sure you're adding companies that you're going to be happy with way past 2025. The stocks I'm going to be buying in 2025 are not really for 2025. They're stocks that are for 2026, 2027, 2028, 2029, 2030, right? No different than the stocks I was buying in 2024 are really for 2026, 2027, 2028, right? You got to be thinking years out in regards to this. So focus long-term. Don't get caught up in all the short-term crap, because you're going to have a lot of drama this year, right? You're going to have a lot of drama. We have a change, obviously, in the White House. It's going to be a lot, okay? And just don't get caught up in all that short-term crap. Just focus on the long-term. Let the short-term be what the short-term is going to be. You get any major corrections this year or crashes this year, take advantage of those, right? The future you will thank you 5 years from now. Don't get caught up. Don't get into too much FOMO in the market in those periods when, it just seems like week after week after week, things are just going up and up and up. Just focus long-term. Be even keel. Be steady in this market. And, hopefully I'm a pretty good guide for that, year after year, for you guys to kind of look at somebody that, just kind of looks at this stuff practically and is like, there's a great opportunity here. This is not such a great opportunity. This one's stretch valuation. This is where, pretty good risk reward is here, and those sorts of things. Okay. Alrighty, folks, if you're ready to take your investing up to a much higher level and scale your portfolios in 2025, and you're looking to apply, join a private group, pin comment down there. That's access to my Become a Master Stock Market course, Millionaire Playbook course, Stock Options Mastery, Dividend Investing Mastery, Financial Statements Mastery, access to my $3 million plus Fidelity account to see all the moves I'm making each week in that. If you're looking for access to 1000xstocks.com, bundled in as well, that entire research platform, we can do all that for you, plus exclusive weekly videos, pin comment down there, fill out a form, see if we can get you access to that, and then get you your Steel membership cards mailed to your house, okay? Much love and have a great day.